The Naira weakened marginally against the US dollar today at the Interbank market, closing at 160 Naira 80 kobo from 159 Naira 97 kobo last Friday on demand pressure. Meanwhile, renewed interest at the fixed income market is expected to continue this week, while liquidity conditions at the Interbank market continue to improve on robust cash inflow. Kizito Odunze, fixed income analyst at Don Lauren Merrifield, joins me now for a look at the bond and money markets in Nigeria. Thank you so much, Kizito, for joining us.
Thank you very much, Emily.
But it appears things are perhaps completely back to normal at the interbank market. We're looking at rates are broadly lower today by as much as 4%. Core money falling from around 14% to 10%. Now, but then looking at the reports that you put out last week Friday, you're saying that the real test of liquidity for Nigeria's financial institutions will unfold in the coming weeks.
Yes, as the report we sent mentioned, there will be a bigger test for Nigerian financial institutions in coming weeks, considering the stance of the MPC that decided to maintain or retain the CRR on public deposits at 50%. It's no longer news that the system suffered a lot of pressures as regards this tightening, and we saw interbank rates skyrocket to very high rates in penultimate weeks. We expect, however, coming weeks that with FAC being released, we would notice a little bit of say, quietness in the market until the FAC funds sort of have been utilized in various other ways, and then the effect of the CRR debits would most likely come back, especially if you consider also that the CBN has also reintroduced the OMO activities. So we expect in a couple of weeks the tightening to really have effect on the market.
Okay, let's quickly talk about the Naira. We've seen some strengthening, we've seen the Naira stabilizing in the last couple of sessions, but we've seen a bit of volatility at the same time. Today, we saw the local currency weakening to around 160 Naira 80 kobo to the greenback. The Central Bank of Nigeria also sold about $300 million today. Where was the pressure point for the Naira?
Yeah, the pressure point on Naira is the same sustained demand pressure that Naira has been facing over the past 1 month or more. We noticed a strengthening of the Naira in the past few weeks, which was basically as a result of a couple of circumstantial events. For instance, the CBN intervened significantly and tried to give Naira a lot of support, as well as as I said, circumstantial entry of funds, sale of funds by certain oil majors. The NMPC sold a certain huge amount of funds into the market that provided some support for the Naira. Now,
okay,
having said that, those have passed, and now we are seeing the same demand pressure coming back to put a lot of pressure on the Naira, hence the slide in the rates today.
Okay, quickly, let's talk about yields at the fixed income market. We saw some profit taken today, although we did see renewed interest, and you also forecast renewed interest for this week. Do you see this continuing, or is this something that's going to be short-lived?
We expect it would be short-lived, considering that the renewed interest came from the foreign investors and some PFAs. Now, the PFA demand is somewhat cyclical because their funds come at certain times of the month, and we expect that demand might have waned. At the rates where the treasuries are trading, it's been at this level previously, and it didn't break this level because for the T-bill yield curve, we have a range of about from 9.77 at the offer on the 17-day treasury bill to as high as 11.73 on the 129-day treasury bill. So in this range where we are, we don't expect to see that much new demand, because the market saw yields a lot higher recently. So one will wonder why one should jumping at this level when we've been trading a range of recent. So we don't expect this to be that much long-lived.